evening. You're watching Markets Tomorrow right here on ET Now. Well, done with the RBI policy on expected lines, a status quo stance from the RBI governor this time. More importantly, a dovish commentary, as dovish as it can get under the given circumstances with regards to commodity prices and, of course, the impending rate hike by the US Fed and a timeline added to that as well. So, done with that, a dovish commentary coming in, a fair amount of choppiness also for the markets. But net result, we've made it back to the 8,500 mark and good outperformance coming in, mind you, from the broader markets with the mid and the small cap indices putting on gains in excess of 1%. Lots to talk about come Markets Tomorrow, and the big voices on the show today. Manish Sonthalia from Motilal Oswal Asset Management, Mayuresh Joshi from Angel Broking, and Sandeep Agle as well will be joining you to talk about the fundamentals as well as the technicals of the trading day. Well, started off just about quiet into the big event, the policy, and then you saw a deep cash coming in. Much unexpected lines, but remember yesterday you did have notes coming in from Moody's which said that perhaps the RBI governor would actually surprise markets and please them thereby with perhaps a smidge of a rate cut to the tune of about 25 basis points. The markets in any case were going with a little bit high hopes, although most economists and bankers did seem to believe that it's going to be a status quo policy from the governor, and status quo it turned out to be. But a bit of choppiness, and then finally we recovered ground with the PSU banking pack leading the way. So the CNX PSU Bank Index that managed to gain in excess of 3%, taking the Nifty all the way above the 8,500 mark, although a little softish, so to speak. You had names like SBI, Union Bank, which managed to put on almost about double-digit gains, the likes of a BOB, which was one amongst the top 3 performers on the index, and Canara Bank as well put on very, very smart gains for itself. The other gainers were the likes of metals as well as autos. They too sectorally led the markets up, and on the flip side you had energy, IT, FMCG as well as pharmaceuticals, and add to that a realty as well, which were a bit on the laggard side. So you had Tata Steel, Hindalco, Tech Mahindra, Asian Paints. They were all nifty movers today. Add to that some of the F&O movers as well, the likes of Adani Enterprises, talks that perhaps in collaboration, a joint venture at that, Adani would be making Apple products in India. That really sent the stock into a tizzy, and stupendous gains coming in on Adani Enterprises. CEAT, Pidilite, as well as MRF Tires quite clearly continue to be the hot favorite sectors so far. Idea, Ken, Hero MotoCorp, even though it came out with an excellent set of numbers, and ONGC, they were the ones which were the laggards. Sun TV, Unitech, the movers from yesterday, they were the ones which saw some profit taking coming in. But what lies ahead come Markets Tomorrow? Let's analyze that with our experts, Mayuresh Joshi and Sandeep Agle on board. Mayuresh, hi, evening. Let me kickstart the discussion with you. What explains the choppiness, even though the RBI governor played it to the T on expected lines?
Evening, Aisha. I think clearly the markets were expecting some rate cut to come through in today's policy meet, though inherently the data points were suggesting no rate cut to come through and a status quo being maintained, which the case was. But again, I think clearly the market's reacting and some money being taken off the table because of the logjam that you're probably seeing in the parliament. And again, I think there is no surety in terms of how the data points will pan out. So if the monsoons turn out to be a lot worse than what we are expecting, what happens with the Fed policy in the coming 2 months, I think these are overhangs which are creating some amount of circumspect for the markets. So clearly, I think the range that we are working out, I think we're still working out with the same range, 8,100 to 8,600 on the Nifty. But again, I think stock-specific action will rule the roost rather than the index movement itself.
Oh yes, stock-specific it was. But Sandeep, evening, if there was one sector which actually, gave that leg up to the market today was PSU banks. And this is not just a one-off move. We've seen the PSU banking pack move for the last 2-3 trading sessions. What is it that you're monitoring in terms of a move on the bank Nifty?
Good evening, Aisha. Yes, you are right. I think the bank started moving 3 or 4 trading sessions back, and most of the banks, the Bank of Baroda, Union Bank, have given a very smart 10-12% upside. Furthermore is very likely, but then the risk is high. The stop losses may not match. So in that sense, I'm a little perturbed entering at these levels. Bank Nifty has a very strong resistance at 19,300, currently at 18,980 or so. So another 200, 250, 300 points still balance in the Bank Nifty. I don't think the reversal should come in before that. And I would talk of a range of 18,800 to 19,300 on the Bank Nifty over the next few trading sessions.
Mayuresh, what is it that you're making of this recent move that we've seen in the PSU banking pack? Which clearly kick-started once the government recapitalization plan actually came about, was announced. It's clearly a long-drawn plan spread over a time frame of 4 years. Do you think it's enough to instill the stocks as well to go up? Because a whole host of PSU bankers that we've been speaking with as well, they say while NPAs may continue to actually stick out when it comes to steel and power sectors, they do see the economy actually turn around. What is your own sense of how PSU banks should be approached when it comes to investment?
So clearly, Aisha, I think the recapitalization move is a very strong structural positive move for a lot of PSU banks. But the internal data points suggest that the stress is very evident on the balance sheets. As you rightly pointed out, some of the stress sectors like iron, steel, infrastructure, real estate, sugar are still causing havoc on balance sheets. And again, I think it's all dependent on how the CAPEX cycle turns. So if for any reason I think the CAPEX cycle is delayed, you're going to see some amount of working capital constraints happen on the company's balance sheets, which will then reflect onto the banking balance sheets as well. And again, I think consciously a lot of these public sector banks have slowed their credit growth. So if you look at the numbers on how sluggish the credit growth has been, it is a clear indication that the banks are clearly focusing on recoveries, upgradations, and again, I think maintaining their asset quality. So clearly, I think the run-up that we've seen, I think the internal cash flows, in our opinion, would still remain weak for a lot of these PSU banks. And again, asset quality issues will still persist in terms of either restructured asset or fresh slippages. So in our opinion, again, I think State Bank is something that we've continued to like. I think we continue to like that. Strong capital adequacy, the retail lending book is quite strong for SBI. The branch network is quite robust, which ensures that the return ratios will remain strong. So I think if I have to pick and choose within a PSU bank itself, we'll stick around with the largest one, State Bank of India.
Well, some other names which were actually holding out in trade today. And remember, Bharti as well came out with its earnings today. You also had Britannia, which came out with an inline set of numbers. I want to see how Britannia actually shut shop. While the PAT was pretty much, or rather the PAT pretty much impressed the street, Bharti's numbers are something that the street is going to react to only tomorrow morning. And Sandeep, I want to come to you for a chart check on what, Bharti may actually be positioned like and whether or not you would recommend a trade on Idea as opposed to Bharti.
Well, Aisha, both Bharti as well and Idea are not looking strong to me. Maybe I may not sell it, but it is not looking strong. There is nothing that suggests buying into. Bharti, in case 400 levels is broken down, then we may even go to 380. But I don't expect that to happen unless the Nifty cracks down or we have a one-way fall. It may just move sideways. In fact, Idea at a level of 165 or so, I find it a little weaker than Bharti, and Idea can probably even test 155. So maybe not before that. I don't want to think of buying. As a trade, I may even think of shorting Idea.
Mayuresh, not sure how closely you track this one, but Britannia, and for the last 2 quarters, one has seen tremendous growth coming in, and this is sort of turning out to be the leader in the FMCG universe when it comes to earnings.
So clearly, Aisha, I think we did like Britannia at lower levels, but clearly at the current juncture, 35 times FY17 earnings, valuation headwinds persist with Britannia. Yes, I think the kind of structural developments that the stock has gone, the ROE is around 56%. There has been a significant improvement in ROCs as well, close to 54%, and there has been a significant upturn when it comes to their cash conversion cycle. So if you look at their receivables, if you look at their cash on books, which has actually turned positive, I think these are all positive signs that Britannia has exhibited, and the management is again hopeful that the cost optimizations would actually prop up their margins from 10% currently close to 11.5%, 12% over the next couple of years. So I think the entire story that Britannia is banking on is cost optimization at one end of the cycle, coupled with the fact of product premiumization and benign raw material prices aiding earnings growth. But again, I think valuation simply too expensive at this point of time. So again, our take is that we did like Britannia at lower levels. If investors have bought the stock at lower levels hold on to the stock. I think the earnings growth, if the management perceives the way it is, I think should be quite decent over the next 2 years.
Well, Adani Enterprises, that as well turned out to be quite the high flyer. And we at ED now are picking up that perhaps Adani is likely to announce a joint venture with iPhone maker Foxconn this week as well. And the brands that they're going to be making together also include the likes of Apple, Kindle, PlayStation, or for that matter, Xbox as well. This, of course, sent the stock into a tizzy 11.5% up move and quite a big breakout. Sandeep, coming in on the charts. Is it worth a buy come tomorrow morning, or would you have been rather prudent to sell out towards close today?
No, it does look good. Extended move towards 104, 105, if you're talking of that, is very likely. At a level of 94, maybe a correction towards 92 should be bought into. Don't expect 90 to be broken. And I would talk of a move towards 104 or so. So makes a case for a clear 10-12% trading upside. So one can play for that as a trade over the next few trading sessions.
Okay, let's take a very quick break then on this edition of Markets Tomorrow. When we come back, some more stocks that could be moving tomorrow. And here's a word from Manish Sonthalia of Motilal Oswal Asset Management. He's cautiously optimistic on the markets. He believes that recapitalization will augur well for PSU banks, but fears NPAs will remain an overhang for the sector.
One should look at the past track record of companies, how they have fared, how the managements have fared, and companies which have consistently delivered, whether it be in the large cap space or the mid cap space, one should be better off sticking to these names rather than flipping around these names and buying into newer names. Last announcement by the government of a 70,000 crore infusement of capital between FY15 and FY19 augments well for the PSU banks per se, but my belief is a lot of NPAs are still hiding behind that, within inverted commas, the restructuring or the restructured assets, and not everything has been brought to the fore as to how much of that is actually NPAs. So textile is another play where, the Make in India theme comes into the picture. Obviously, lower cotton prices are going to help RM costs to sales.
With Markets Tomorrow right here on ET Now. Done with the policy on expected lines. More importantly, the RBI governor gave an extremely dovish commentary and explicitly implying that perhaps there is further headroom to cut interest rates going forward as well. And a huge rally coming in the PSU banking pack, lifting the market off the day's lows after that bit of a knee-jerk reaction that we saw when the markets came pretty close to actually testing that 84.50 mark in trade. So back above 8,500, and PSU's banks in particular clearly were the limelight of today's trading session. But come tomorrow, of course, the markets would be reacting to Bharti's earnings. You'll also have the Nikkei India PMI services for the month of July come out, and the composite for July as well for the Nikkei PMI, and a whole host of data points when it comes to the Chinese equities as well, or rather economy. The China PMI composite as well for July is going to be released. Back home, of course, lots of key earnings as well to look out for, and I'm just going to quickly read them out for you. We will be looking out for a whole host of mid-cap earnings, the likes of Bata, Canara Bank, Imami. You will also have Marico, PTC India, Ramco and Shree Cements as well will come out with their earnings. IGL, Snowman Logistics would be some of the interesting ones to look out for. Also add to that Ramco Systems and Treehouse Education too. But let's move forward and let's talk about what could be moving in trade come tomorrow. And Poonam Sani from our research desk joins in to analyze just that. Poonam, come to you. What's the first buzzing stock on your radar for tomorrow?
Well, Aisha, watch out for Bharat Forge. Dealers do indicate strong FII buying into the stock, and we had CLSA also coming up with a report with a target price of 1465 on Bharat Forge, stating that although the cyclical headwinds are still there, but the structural story is intact for Bharat Forge, and also that they are seeing an EPS CAGR of nearly 29% over FY18, and that ramp up in new orders should be helping the stock. Besides that, the second stock is Magma Fincorp, wherein we had a stellar run up in the stock price today, but management also has indicated on the con call that although the AUM growth would be muted, we would be seeing a strong margin expansion on the back of focus on high yielding segments, and Ambit Capital has highlighted that the stock is trading at a 50% discount to its peers and that the ROEs are likely to improve to 14% over the next few years. So again, a buy on Magma Fincorp as well.
Okay, Poonam, we're going to leave it at that. Bharat Forge as well as Magma Fincorp, watch out for these stocks when it comes to trade tomorrow. And Mayuresh, I want to come to you on Bharat Forge. CLSA maintains a buy, target price of 1465. According to you, does it still remain a lucrative story?
So clearly, I think if you go by the management here, say they're expected to double their revenues over the next 3 years. And as I was hearing the management yesterday on your channel, the non-automotive businesses, the aeroplane business, the mining business, the defense business is something that Bharat Forge is looking at. The US CV business is expected to hold up exceedingly well for these guys. Clearly, valuations a little bit on the higher side at this point of time. So I'll wait for declines onto this stock. But again, I think it comes back to the same old story. I think investors holding the stock at lower levels should hold on to the stock.
Sandeep, another pocket which continues to be a buzz has quite clearly been the tyre space, be it an MRF or for that matter the entire bag as well. That continues to move, and today we saw that in MRF when it gave us a breakout. CEAT as well held out very well. What's an interesting trade to take forward tomorrow?
Aisha, I would take a call in Apollo Tyres, not because probably it is the strongest, but CEAT and MRF have already moved up, so no point in getting into them. I think Apollo Tyres will follow, and you will see that move coming in Apollo Tyres, so I would take a call in Apollo Tyres.
Okay, that's the word coming in on Apollo. But yes, Hero MotoCorp as well came out with its earnings. And while the earnings were on expected lines, we at ET Now pick up that perhaps Bain Capital is likely to sell a 1.5% stake in the company via a block deal. And I want to come to you, Mayuresh, not on this block deal, but the prospects with regards to earnings that Hero MotoCorp delivered. Inline set, but what lies ahead given the kind of pressure that we've seen from two-wheelers in particular?
So clearly, I think a lot of their volume growth story depends on how rural incomes pan out. And if there are monsoons which are not up to the mark, 40 to 50% of their sales comes from the rural side. So I think that business will get impacted in a big manner. Clearly, I think the margin outperformance was exceptional, but whether they'll be able to outdo that quarter after quarter is something of a question mark. So clearly, I think the Project Leap initiative that Hero MotoCorp had taken in terms of cost optimization, the savings on royalty, I think we're all getting reflected. The tax benefits that they received on the Neemrana plant also contributed significantly to their bottom line. But clearly, I think it's a story about how volume growth pans out. I think the latest figures suggest 8% drop on a month-on-month basis. So clearly, the monsoons will be key for Hero MotoCorp. And again, if you go by valuations at 16.1 times FY17, earnings of close to 165, 170 rupees, our take is fairly priced, at least from an FY16 perspective. So at least at this point of time, I think we'll stay largely neutral onto the stock. Fresh investment should be done only on lower levels.
Okay, let's begin to wrap up then on the show. And as we do that, let's also get you some stock ideas that you could work with come markets tomorrow. Sandeep, what's on your list?
Aisha, I talked of an Apollo Tyres. I would talk of the levels of buy in Apollo Tyres with a stop loss of 210, target of 231. A buy in a JSW Steel. The metal space is looking good for a trading upside. I would choose this from that space. A buy in a JSW Steel, stop loss of 861, target of 921.
Mayuresh, any stock that's looking good for an investment perspective from a 6 months to a 1 year time frame?
So clearly a couple of stocks is what we are liking, Aisha. Inox Wind is something we are preferring at this point of time. The numbers were relatively better because Q1 is expected to be a very weak quarter for wind energy companies. But going forward, our take is with an improving order book, sites under acquisition close to 2,000 megawatts. Add to that another 2,200 megawatts from the States, capacity expansion being done in a very timely manner by Inox Wind. Our take is that the top line growth should grow at a CAGR of 48% over the next couple of years. Margin should sustain sustain between 17.5 and 18%. And again, at 13.5 times, we believe that the stock is very, very reasonably priced. So Inox is something that we are liking from the mid-cap space. And mid-cap cement, I think JK Cement did not come with a very great set of numbers. But our take is that with volume growth coming back, with the kind of capacity utilization that these plants will enjoy going forward, raw material prices expected to stay benign, blended volume growth expected to be between 14.7% to 15%. And again, I think an EBITDA to ton basis improvement over the next few quarters. So an EV to ton of around $87, $88, we think it's reasonably priced considering its capacity of 11.6 MTPA. So JK Cement is something that we'll continue to like from a medium to long term perspective.
Okay, look out for the stocks recommended by Mayuresh. Mayuresh, Sandeep, gentlemen, good to have you on the show as always, and we'll catch you then with the markets tomorrow morning on The Market.